This is the normal candlestick chart pattern. This is the same chart but with a Heikenhash trading indicators. So you can notice the difference that in this chart, the normal candlestick chart, you have a lot of noise of bullish and bearish candlesticks. But you notice that in Heikenhash chart, you have series of bearish movement and bullish movement, which is good as it gives you clear signals of when to buy and when to sell. Now, in this video, I'm going to show you how you can use this simple indicator to give you the best signals in the markets of when to buy and when to sell. And again, I'm going to correlate it with another simple indicator that you can use it together with this one so that you can get the best edge. For example, you will notice that, for example, right here, if you bought right here, okay, you notice that if you bought, for example, right here, and you rode this trend right up, you will not buy right here, right? Because this is signaling the reversal, right? You have the left shoulder, and then the head, and then the right shoulder. So this is signaling a trend reversal. So if you bought right here, you rode the trend up, you will not buy right here because it's already reversing. So I will correlate it with another simple indicator that will help you not to buy at the wrong time or buy at the end of the trend or sell at the end of the trend. So let's get started with the video. Hello, again, my name is Chintu Jackson, and in this video I'm going to show you how you can use this simple trading indicator. If you have been in trading whichever asset that you're trading, whether you're trading forex or you're trading stocks or you're trading indices, for example, I love trading volatility indices. So whichever assets that you're trading, it doesn't matter, as long as you're trading on the MT4 MT5 trading platforms, this indicator is right for you, and it's very interesting. As you can see, it filters out the noise, buy and sell, and basically show you the indicators to sell when it's the right time to sell and buy when it's the right time to buy. For example, you can see, so you can see when it shows the series of green candles, then means you could have a buy, you could have a buy, and when it shows the series of red candles, you can basically sell, which is much more different on a normal candlestick charts. As you can see, the normal candlestick chart patterns, a series of you have a few green candles, then red comes in, then consolidates, and in another chart, for example, this consolidation area, it will filter out based on the trend movement. So this video, I'm going to show you how you can basically have this installed in your chart. So let's begin right away. So basically, I will have a link in the description from where you can download this indicator. And once you have downloaded, I've already downloaded this indicator and it's right here on my screen. So I'll go ahead and copy this indicator. So after you have downloaded that indicator from the website that I've put the link in the description, copy this, copy the indicator and open your MT5 or MT4 trading software and click on the file right here, and head over onto open data folder. And when the data folder opens, click on MQL05 or MQL04 if you are using MetaTrader 4, and head over to indicators. On example right here, paste your software right here. So it is pasted here, so let's go ahead and close this, and right now click on view and navigator. So when the navigator opens, basically you head over to indicators right here, click on indicators, but before that, click on this field right here and click refresh. So after it has refreshed, click on the indicators right here and scroll down and look for Heikenhash, this one right here. So when you get it, drag and drop it to your chart, and on the chart you check on the colors. So these are the default colors. So the bearish color, we could keep it red, and the bullish color, let's make it lime. Okay, so visualization, make sure all time frames are selected, show in data window, and click OK. So when you click OK, you can see the chart has been, the Heiken-Nash has been imported to our chart. So we want to filter these stuffs right here. You can see these ones, these candles where you have a red candle and at the same time green candle at the same time, where you have a, these mixed colors, we want to filter them out. These ones where you have red and green at the same time. So let's right click on the computer and head over to properties. You can as well as press function 8. Now in the colors, because we are using a black background, we want to make every candlestick in our charts the normal colors of the candlesticks that we had in our charts. We want to make them black so that we remain with the original colors for Heiken-Nash, right? So let's get the bar up, make it black. So we are making every color right here similar to the background color, right? So bar down, make it black as well. Bull candle, make it black. Bear candle, make it black. So you can see this field has nothing left, right? So when you click OK, you will now be left with only candlesticks for the Heiken-Nash and the colors that we selected. So pretty much that easy. So you now have the Heiken-Nash charts imported in your charts, and you can now see what we are talking about. So this is the same charts that I have here, and you can see pretty much the same. So now when you want to trade, for example, based on your style of trading, if you I love trading with H1 because I check the markets about 2 to 3 times in a day. So I trade on H1, but I do analysis right from the day 1 and H4. So right now you could see if you are looking for sell opportunities, you wait to see a red candle, but it's not that every time you see a red candle you press a sell order. No, you have to do analysis on multi-hour time frame, and again using other trading indicators like I'm going to show you, so that you enter the best time in the market and exit at the best time in the market. For example, you can see if you did your analysis, we have my drawing tool. So you can see, for example, if we had a move up, and then this was consolidation, which signals a reversal, and you have the left shoulder and the head and the right shoulder, and boom, this what we call the neckline has been broken, and now it's going down. So probably at this point you will enter a sell. So when you enter a sell right now, you ride a trend down, and when you have some sort of reversal right here, you would exit at this point, right? And I will show you the signal that will tell you when to buy at exactly this point and sell at this point. Again, let me show you something different. For example, okay, somewhere here. Now, you will notice that if you're in the markets and you're trading and you've sold it maybe right here, and you're in the markets, so you could exit here based on your trading style, or if you keep holding it, you could still make money and as it goes down. Or if you exited right here and still going down, you could sell it back here, make money, and right on this point, you exit, right? You exit somewhere around this point with the second trading indicator that I'm going to show you. Now, what I wanted to show you is this. So while you're in the markets, you will not sell here, right? Because it's going down, but you will not sell here because the second indicator that I'm going to show you will filter out this signal that is not a good signal to for you to sell at that particular time. So which indicator? The indicator I'm going to show you is going to be a simple moving average together with an exponential moving average combined. So what you are going to do, we are going to head over on insert indicator and on trend, put moving average. And right now we are going to put an exponential moving average 20, method exponential, and color we are going to call it maybe aqua. Okay. So that is one, and then we are going to add another one, trend, moving average, exponential, and period we are putting 40, and let's give it orange. Orange is weird. Let's give it okay, let's give it blue. Okay, that's good. So when you enlarge this, you can see how basically it works. So let's put the third one, which is going to be a simple moving average again. So this one we make it simple, and we put a 100 moving average, and we are giving it color. Let's give it yellow. Okay, so basically this is it, and using these two at the same time will help you get out of trouble at the right time, and will help you to get into the market at the good time. Now, okay, so when do you buy, right? When do you buy? Okay, you only buy. Okay, here it is. You only buy when it's an uptrend. And what are the signs of an uptrend? So what are the signs of an uptrend? It is an uptrend only when, sorry, okay, let me have my drawing tool again. Okay, so you only buy when it's an uptrend. And what is an uptrend? An uptrend is characterized by a series of higher highs and higher lows. That means the market is moving up. You have higher highs, higher lows. So the next high is much higher than the previous high, right? And the next low is higher than the previous low. You get my point? So in other words, the market is making higher highs. You get this series, and higher lows. These are the lows, and these are the highs. You get my point? So when the market starts doing that, and it is moving up, then it's the right time for you to buy. Now, that is the rule number one. Rule number two, you have the moving averages. Let me delete these stuffs. Okay, you have the moving averages facing up. They are all facing up. In other words, they are all going up. So you have the 100 moving average, simple moving average, which is the supporting line. So remember, when you are trading moving averages, the moving average must be going up for you to buy. One, the moving averages must be below the price action. So if this is the price action, these are the price charts. So the moving averages are like supporting the price. So moving averages must be below the price action. In other words, if the price breaks below the moving, that means the moving averages can no longer support the prices. So we are expecting a reversal, like right here. So this was some sort of a reversal when the price action broke below the moving averages, but it later supported it all the way up. So what I'm saying is, if you want to buy, the moving averages have to be facing up, and they are all going up. So the third rule is, when you're going to buy, the signal that I want you to look at carefully is, one, you look at these two moving averages, right? Sorry, look at these two moving averages. The 20 exponential moving average and the 40 exponential moving averages have to have a crossover, and this is the crossover that I'm talking about, right? So when the 40 exponential moving average crosses below the 20 exponential moving average, that is a signal for you to buy. So when these two cross over, at the same time you have series of green candles heading up, and you have this 100 SM simple moving average again crossing below them. So this is a good sign that you would buy. Now, depending on the type of a trader that you are, you could buy for a long time. That means you buy and hold or ride the trend all the way up. Or you could as well as buy for a short time. That means you're buying here, for example, for this case, and ride the trend up, depending on the type of the trader. You're for a short time trader, that means, for example, you have set your stop loss right here, and your profit target maybe on 2 times your risk, and maybe your profit target right here, and when it hits your profit target, then you'll be out of the market. So or else you could be trading long term. That means you are riding the trade up, and you will ride the whole trend until you have a signal for you to sell. So this is where you would exit the market when if you're a long term buy and hold person on H1 right here. So differently, if you are looking for a sell signal, that means you could sell right here, because we have the two crossing, and this one right here, the 100 simple moving average crossing, and then you would buy it back here with a profit. Again, review which type of a trader you are and your trading style, and basically how long it takes for you to hold a position, and then that's when you will make better decisions based on your trading style. So again, you would buy here, and based on your trading style, you could buy back right here with a profit. Differently, you could if you sold somewhere right here at this point after the crossover, or you sold at this point, you had your good trend moving down, and here you exit the markets right here. So it all goes to which type of trader that you are. If you're a short term, that means you're in the market for a few hours and exit with a profit. Or if you are a long term trend following type of a trader, that means you would buy, for example, right here, and have your trend